All right, ladies and gentlemen, got your watch list coming in November 15th, 2019, and we did it again for earnings in a very unexpected fashion. So we did Nvidia, and this was a $170 bet. The max return on it was $1,000, but how we played it for earnings was a little bit different and kind of even unexpected. I didn't think I was going to play this. I was looking at the plays towards close. I made this around, I think, like 30 minutes right after the 11 at 11, but instead of playing the ups and downs like we have been doing, we went after the iron condors and went back to some of the selling premium. So I want to go over that play. We have a big day tomorrow with a November 15th expiration. We're going to get the Qualcomms expiring. Those kind of made a move. So if that does good tomorrow, we're still in the game. We have those Disney. Some people have that till the next week and all that. So it's going to be an exciting Friday. We had a few things today too in the market that, you know, you could even see some of these drops. This was the European close. And then there was some negative Chinese news, kind of talks about a phase one deal not going through, and it was like it was crazy during the day how the news lagged and the market reacted. But then again, like we've seen this last few weeks, it quickly rebounded and the market hasn't been affected by much lately. But this is even, I'm going to talk about this in a video tomorrow for you guys coming into the weekend, because I kind of already have my year-end prediction with kind of what this is looking like. We're even seeing today also on the Dow Jones, it only closed 0.01, about 1 point change. So it's not anything like we saw the other day or earlier this week where we saw that historical unchanged close. But at the same time here, we are seeing lots of movement. You're seeing the indexes not move, so there's stuff to pay attention for there. But I'm going to talk about that more tomorrow in tomorrow's video. But I want to talk about, again, what we did with these earnings, the plays that we made today, and I also have some of the other keys for you for tomorrow, and then the stocks to watch coming in tomorrow. Tomorrow's going to be a Froggy Friday. So whether you are new or old, it's either going to give us an opportunity or it's not going to be an opportunity. So that's what we're going to talk about. I think it's going to be very, very exciting. So with what we've seen lately, we've been seeing a lot of opportunities in the options market in some of these cheap plays. So we'll see what happens. But yes, let's get into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you subscribe. And the most important thing you need to do, post your watch list below. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We made all of these trades live, so we're going to go over them here on the watch list, but you could tune in anytime during the day and watch us trade live, ask questions. We like y'all. We ask that you're positive, respectful, you know, post your plays too. So make sure you're there in the morning or you stop by, but hopefully we see you all there. But keys for tomorrow, Froggy Friday. If there's no big movements in the indexes, we are going to be screwed, or even with individual names. That's the thing. The Froggy Fridays are important. If you don't know what the frog is, we have a video on it and you could go look it up. But the most important thing with the frog is that it's kind of what we talked about earlier this week. You wait for the stocks to go up in the direction that you want while the option stays the same price. So we're going to see that a lot. I'm trying to think if there's an example I could show. But again, we had the AMAT earnings. We're going to talk about how that played out. But that's going to be one with these continuation plays. But again, come live and you'll be able to see it. And then the next key to understand here is how to use your tools with premium, your premium tools. You know, we have different tools in the arsenal, and that's what we're going to talk about here with this Nvidia. It's even what we've been doing also with the Disney play as well. When we did that ghetto spread, you know, we're using premium, but now in this case too, you don't always have to have a big move when it comes to these earnings plays, and you could still get some good percentages, believe it or not. You know, we even talked about the 11 at 11. You buy an option, it says a very specific thing about a stock and where you think it's going to go. So when it comes to earnings, you could make, you know, all sorts of plays, even with similar risk rewards. You could make 1,000% play that says the stock's going to stay the same. It's going to go up one way directionally, whichever one you think, or it's going to go both ways. And that's kind of been the difference maker. And like I was going through plays live today, and I was even saying it with Nvidia. I was like, well, you could do a reverse iron condor and we could have played the big move. But then as I saw Nvidia today, it kind of looks how Netflix did coming into earnings in a weird way, where, you know, Netflix was down though, but they've came up a lot and they were staying up here. The options were expensive and you had to get like almost 3 standard deviations to get anything cheap. So I was like, it kind of reminded me of Netflix. The Condors, you got a decent amount of money, and that's what we're going to go over there. That's the play that we did. But really, one of the deciding factors, I said this a few times on stream, that made me want to play Nvidia how we did, was simply the fact that it wasn't one of these more obscure companies like AMAT. But AMAT, again, we're going to talk about that. But still with Nvidia, it was one of those more name brand stocks, name brand earnings. There was a lot of eyes on it. It already went up a lot. A lot of people were in the options. That's kind of what we saw with Netflix. I thought the Iron Condor offered a better risk reward on there. And now that's how we made money with, even though Nvidia reported, the fact that it did not go up or down in a major direction. Remember, I said this whole week I was pretty much going to ignore it. So think about it. It kind of makes sense why I did this today here towards the end of the market. I wanted to see what the prices did, but imagine I didn't play Nvidia all last week up until this week. If I didn't want to play it or purchase it for the same strategy we've been doing to buy it, it makes a lot of intuitive sense why we sold the premium and did an Iron Condor. And the Iron Condor is essentially 2 credit spreads on an option on both sides. So I don't know how much we're going to make on it. Here's the play here. And it says we're down 2,400 today, but I don't know, one of my random UVXY says I was down 2,000. So that was a glitch there. But here's the Nvidia, and that's for the weekly. And now this is the difference between the plays. I did the next week, the November 22nd. And then I also did a butterfly earlier. I didn't put this one on stream, nor did I put it on the stream alerts, simply because I accidentally got filled. The range, it got filled for like $16, but I did not think this was a good play. But the main play that we did on stream, and that, and you guys even, I showed this to you during the live stream, but the main play was right here. And this play was good and bad for a few reasons, which we'll talk about, and we're going to see how the value is tomorrow. But I shorted 5 of the 212.50s, and then I purchased 5 of the 215s. That's on the call side. So again, we shorted the 212 calls. This is a credit spread on the call side, but then this is we do another credit spread on the put side. This is the Iron Condor. We sold 5 of the 207.5 puts and then bought 5 of the 205 puts, and then you collect the credit on this. And I received $220 in credit on it, and I sold 5 of them. So I collected $1,000 in credit. The max risk, since I got $220 per contract, the max risk between these strike prices is $250. So the max risk is $30 per contract. So we did 5 of those contracts. 30 times 5 is $150. I think I don't know why it said 170 on mine. I don't know if that's charging me commissions from Tastyworks, but my thing said max loss 175. But pretty much you collect $1,000 in credit, your max risk 150, 175, and how do you win on this is pretty much by the end of November 22nd. If Nvidia stays in between these prices, you make these contracts expire worthless, or you essentially want these contracts to lose value for more than what we sold them for. And since you collect the premium, in this case $220, your break even is pretty much $2 lower than the strike you sold here, I believe so. But in this case, our break even on the downside is 205 on Nvidia. Yeah, around I think like 205.80, and then 214.80 on the high side. So pretty much if Nvidia stays in between those, these contracts are going to lose value and will win. And these are going to go down in value tomorrow. It's pretty much ended in a perfect spot, because as you can see here, think about what we did. We sold the 207 puts and we sold the 212. So if it's the stocks right now at 208, these are going to lose value because they're the calls, but then these are also puts, but they're not going to be in the money. Then earnings is over. These are going to go down somewhat in value. And the key is now by expiration, I need these to lose value. But the better play in this case would have been even doing the weekly, because I hit the range pretty spot on, but we also have to see where Nvidia opens and how it moves. But the weekly, we could have got like, I think it's like 190 credit or like 210. You would have got $10 less per contract. You could have done the same exact range, but now these contracts would depreciate a lot faster because they expire tomorrow, but it's a little bit risky. So that's that play. But effectively by doing an Iron Condor, where again, the earnings are reporting. And in this case, if we say, hey, we don't think the stock's going to move, or the contracts are really expensive and you could collect a lot of premium, you could sell an Iron Condor to say, hey, I think the stock is going to move within this range. And if you're correct, you profit, but you could still do one of those larger gains. So in this case, we turn, depending on where it opens, we'll probably be up tomorrow. I want to say anywhere from $100 to $400. It all really depends on how those puts get valued, and because it has an extra week. But essentially, if it does stay at this price, even coming into next week, if it goes up and down and stays below 214 or above that 205, for your $150 risk, you walk away with $1,000. So that's going to be a good play tomorrow. We're going to watch that. But then on the negative note, we lost Walmart today. So these got absolutely clobbered, and you can see here, I think, so again, there's that little UVXY thing, but here's the Walmart. We lost 730. So I'm down 670 total. So there's still like $60 in value in these contracts, but we were up on them too at close. So we lost the profit. And these contracts were up in the morning. The 128 calls were up 100% for a brief second. Now, why did we lose on these? Because we were already down on the puts coming into the earnings yesterday. But Walmart reported they did good. They went up to 125. So think about it. If they kept going, we were close to the 128s. The 128s had till next week. They were still up, so it did great. But then throughout the day, Walmart was up and down. I don't know if it was the call or not, but as it got digested, they sold back down to 119. So now the calls lost their value, but then you're so far away from the puts they both lost value, and that is now the effects. This is what happens when you buy these types of plays. So just like with the Nvidia, how did we make money? You know, we're selling within a range because I pretty much said Nvidia is going to cuck, and that's exactly what Walmart did. So that's your risk when you do buy both sides here, is that if it does not go far enough in a larger range, your risk isn't you just lose on one side, because again, the stock could still go up and you could still lose on your calls because it does not go up enough. Just like I could still lose if Nvidia goes up even more than I expect or below more than I expect, but I'm pretty much based on the price. You're usually setting a range of where you need the stock to go. So be careful with playing those both ways and understand what you're implying with that. So there was that, and then we had the AMAT play, and this one is going to be interesting tomorrow. I know a lot of you guys are curious. It hit. They had a great earnings. It was a surprise earnings. They beat. I think we might need to give it one more day. And that's even what I have to say, too, with Walmart. Now, Walmart is also a stock to be watching here, though. Coming into tomorrow, depending on Friday, or even coming into next week, I'm going to be watching this. What am I going to do with those contracts? You guys say I have $60 in value. If I was willing to pay $300, $400, or $600 for them earlier, I'll keep that $60 just for a week. And you guys have seen what's happened in anything. You know, there could be follow-up news. Again, the news needs to digest, settle in. They need to get earnings, upgrades, downgrades, all of that. And that's what's going to be important. And the QQQ is ripping over here after hours. Oh, even the SPY. Oh, well, look at that. All-time highs while we're making the watch list. But watch out for that. It just in terms of continuing up from there. I'm still going to keep my eyes on it, and that's why we'll be holding those contracts. But then AMAT, we did this play. I sold the 63. So remember, I had about like $800. I was like, it's too big of a position. My 63 calls were down all day today. And just like Walmart, at the end of close, the IV shot the contracts up. The 63s, I was able to get like a $30 profit off of it, and they were worth like $400 something. So I sold out of those so I could reduce the position a little bit. And then I just kept the 63s, and then I kept the puts, because the puts were already down like 30 or 40%. So I still have that $400 or so. Yeah, 480 on AMAT, and it's going to be interesting because the 63s, again, they have time, and they did good. They clipped 60s all-time high, but they raised guidance. They did. I think if tomorrow's good, or again, depending on how the market takes it, that could bring it up tomorrow, but we're going to see. But I like AMAT. That play is going to be 50-50. I really don't know how that's going to turn out, but most likely the 63s might be down, or they're going to be, it'll kind of do what Walmart did where it's close. And then the minute this thing moves down, you'll lose value on those. But we'll see. You know, we'll be handling that on stream, so make sure you guys are there. But watch those. We're going to be watching Nvidia tomorrow. Then Qualcomm, we have that play pretty much tomorrow's the deadline. It's if it goes above 92.50, we'll be able to make more money than the $3,000. But now I'm pretty much at the max gain right now at 3,000. We lost those gains from earlier this week because the stock dropped, but if it magically goes up $4 tomorrow, if it does good off of the Nvidia earnings somehow, then we could walk away with $12,000 on that one. So we'll see on Qualcomm, but I'm going to be watching that. Then watch Disney. It gave back some of the gains, but the fact it still held up above 146, I think that's telling. So maybe there could be a round two. We talked about it today. I don't think they're going to give another update on Disney Plus. Again, I said it on stream. I said hopefully they do, but it's not really common practice for a company to release, the numbers that they get every single day that it comes in. Maybe after the first week, maybe after the first month, but usually that's going to be reserved for those quarterly reports. So keep that in mind, but I still want to see how Disney plays out. And then watch Google. They got an antitrust probe. They actually dropped pretty big, but I think they're going to come back up here. But I've been having my eyes on them. Those could be good for the Freaky Fridays or the Froggy Friday tomorrow, so watch out for Google. Then moving here, more continuation plays. Watch Roku. They killed it today, and the thing I'm looking for with Roku is anything above this 150 level. So if they really even got past like 148, this is a key level, so they could easily, they've done nothing for some time, but if they get some good steam, this is a definite breakout range, and you guys have seen how crazy Roku can move and how it's already moved, so watch that, and that can be a great candidate tomorrow on Friday, but be careful of all of these in the morning. They're going to be expensive. Then the other one is Expedia. We still have those 95s. We're up on them like $100 today. And it's crazy. We're up on them more the day after earnings versus now because there was more extrinsic value and expectations when people were like, well, it was dropping and there was more time. People's imaginations were running wild. But now the 95s are pretty cheap because it's hit 95, but it's not plummeting at the same 30% rate after earnings. But we're still holding those earnings. I'm going to be watching them. Again, they could be a good continuation. And even today, Baidu started running up out of nowhere. They gave like an announcement on like their monthly active users or something like that. But Baidu is very solid. They could be decent, but watch even all the other Chinese stocks. I mean, watching those. Then AMD with all these chip makers and Nvidia and all that. And again, they're even just ripping towards 52-week and all-time highs. So AMD at this point is pretty crazy. It's going to be interesting to see how they play out. and that's usually a good one to trade. Friday it's going to be cheap, but just don't get caught going too far at the money on those. And then Restoration Hardware. This one hurt my soul. We were looking at this today. It looked good, but the earnings was far away. We spent some time. I liked it, but I didn't end up grabbing it. And then it was announced that Berkshire took a stake after hours, and that's why the stock is running right now. Well, after hours, but you get the idea. So watch Restoration, though. They could be a very, very good play tomorrow. And in general, they're even coming into earnings. They were already looking good, so that may make things a little overpriced, but we'll see. Maybe some of the even further out the monies, but I'm going to be watching that, but, we'll take it with a grain of salt. And then Lululemon, they've been doing good. They kind of fall in the same boat, but not really. I guess higher end consumer products, you could say, but you could even get a little glimpse from what happened with Goose earnings, but they have earnings, I think, in a few weeks here too. So there's some later earnings, but now this is what I was even saying with the keys, using your premium tools. You're coming to the wrap up here. Get ready to utilize different plays. There's still going to be some earnings, but you can't force it too much. But then lastly, for the other company, I'd say watch TLT. That went up, and those contracts have actually been making us money again. The Decembers are holding up. Those Novembers died, but the Decembers are holding up pretty well. Surprisingly, I'm still down like 30% total, but the fact this much time's gone by and all that IV, it's pretty interesting, I would say. So watch TLT. Watch the banks here at this level as well, too. I want to see what they do. Excuse me, that's UVXY. But I was saying watch the banks, and even if you're going to watch TLT, watch the banks. But then I was going to say watch UVXY as well, too. They're kind of beaten down. I don't know if that would be the play I want to play on the downside. Is the VIX rocketing up off? I don't see. This is crazy, man. But then lastly, watch Apple. I'm going to be seeing what they're doing. They actually got a rare downgrade today. That was pretty seen. I think it was from Maxine. I don't know the weight it carried, but that was a little bit surprisingly negative. But they were down in the pre-market, then they sold off, but still pretty resilient, and Apple's still on a very nice uptrend there. So that is your watch list, ladies and gentlemen. Make sure you post your watch list. Make sure you're hydrated, healthy, ready to go, and we're going to see you tomorrow in the morning. Understand that you're blessed. Get ready for a Froggy Friday. It's going to be exciting, so control your capital, control the YOLO demon, the FOMO demon. You know what it is. Doesn't matter if you made money, lose money, at least you learned something. This is an exciting time. And then get ready for even tomorrow, and we'll even talk about it on stream. There is some end-of-the-year stuff coming on, but I won't spoil it. You guys got to stay in the game, baby. Let's go. Stay goated, stay blessed, and let's go.